Okay, hi everyone. Thanks for attending Keypoint's VAT Return webinar today. It's nice to see so many of you joining us, including those of you from other countries like Saudi Arabia. This is the first of a series of 4 webinars we'll be holding this month. We'll be holding another 3 webinars later this month, where we'll be covering different topics such as NBR updates, financial services, and economic substance requirements. So if you've not signed up for them, they may be useful to sign up to. So my name is Tariq. I'm one of the tax managers with Keypoint. I'm joined by my colleague Dow, who is also another tax manager at Keypoint. We also have with us today Mubin Khadir, he's our head of tax, and our senior tax manager, Mark Gamble. And they'll be taking questions. So if you have a question, guys, please type it in the chat box. You should see a chat box. If you have a look at your Zoom system, what you do is type your question in there, and Mark and or Mubin will try and give you a response immediately if possible. Okay? So the main purpose of today's webinar is to help businesses that are preparing a VAT return for the first time. We have a lot of attendees who include businesses which have submitted VAT returns throughout 2019. So they may find today's session quite simple and quite straightforward. Okay, but you're obviously still welcome to, to join in, because there'll be a lot of discussion about some important VAT concept. Okay. Okay. So the VAT return submission deadline, just so that for the new people, and the payment deadline is 1 month after the tax period ends. So if your tax period ends on 31st of March, a lot of the first-time businesses will have that tax period end date. Your filing date and payment date to the NBR will be 1 month after. So that will be the 30th of April, 2020. So whenever a tax period ends, you get a month to file and to pay. I recommend you do that sooner than the 30th of April, just in case you get stuck or something doesn't work with the NBR portal, because sometimes it does play out. So I would recommend doing it at least a few days earlier. Okay. So in today's webinar, we have a few points on our agenda. We'll be covering important VAT concepts to understand before you start preparing your VAT return. Now, look, if you don't understand the important VAT concepts, I would definitely recommend that you review these concepts and read up into them or get advice before you start submitting your VAT return. Otherwise, it's quite likely that your VAT return will be incorrect. You'll either be adding things in which are not supposed to be there, or you'll misreporting items which are supposed to be there. Okay? We'll also be going through the content of the Bahrain VAT return and what exactly is required to be reported. After that, Dow and myself will run through a 10-question quiz. This is a good time to test your understanding about the VAT rules. Maybe, give yourself a mark out of 10 and see how many questions you get right. That might be a good pointer. Okay. After the quiz, what we'll do, we'll go through some FAQs. They're frequently asked questions that clients commonly ask us based on our experience. Very useful questions. They don't cover everything, but they're just some of the most important ones that we come across. And once that is done, we will have a question and answer session at the end of the webinar. So definitely stay till the end. Okay, so the first thing we'll be covering today is the place of supply rules, one of the most important concepts for VAT. If you don't get the rules for place of supply, everything else kind of becomes irrelevant after this. So the place of supply must be correct before you determine any of the other rules. Okay? So we've got businesses who have been registered since the 1st of January 2019. They still get advice and they still ask questions about the place of supply when they're not sure. Okay? Another important VAT concept is a time of supply. So after you've worked out the place of supply, then you need to work out the time of supply. Again, a lot of confusion around this, as there are multiple rules about when a tax point is triggered and when a transaction should be reported. So this is another important VAT concept. Okay, just for clarification, because again, there's a lot of confusion around this, taxable supplies include supplies at 5%. For example, you sell a pair of trainers, that is taxable at 5%. Now, if you sell a bottle of water, which is drinking water, it's taxable at 0%. Just because it is 0% does not mean it is not taxable, okay? So taxable means 5% or 0%. Then you have a different term called VAT exempt. Now, VAT exempt means there is no VAT on that transaction. Okay, so VAT exempt and VAT at 0% are very different things. Okay, so let's start talking about the place of supply rules. As we have previously discussed, VAT is a tax on consumption. So we have to work out where the goods or services are actually consumed. Okay, because the VAT is a transaction tax and it normally is applied where a person benefits from the goods or services. So the place of supply determines whether Bahrain VAT should be charged or whether the transaction should be taxed in another jurisdiction. Okay, there's general place of supply rules. So they apply to most transactions. Then we have a set of special place of supply rules. There are quite a few exceptions there. And the rules will depend on whether you're supplying goods or services, okay? So let's start talking about the place of supply for goods. Now, the place of supply of goods is dictated by whether the goods are supplied with transport or without transport. So if you provide or if you sell goods to someone and you just sell the goods without transportation, the rules are different. The place of supply with transportation is very different. So when you supply goods with transportation, the place of supply is where the transport starts. So if the transport starts outside of Bahrain, that will not be reported in the VAT return, okay? But if you supply goods where you install or assemble the goods, the place of supply will be where the installation takes place. So give you an example, you have a piece of machinery, you want it installed, customers in Bahrain, the supply is in Bahrain, but the supply or the installation is outside of Bahrain, then in that case, it will be outside the scope of Bahrain VAT. It will not be reportable on the VAT return, okay? A lot of businesses mostly supply goods without transportation or installation and assembly, and where that is the case, the place of supply will be where the goods are placed at the disposal of the customer. So that's basically where you say to the customer, here's your goods, you can do whatever you want with them. So they normally obviously will take them away, and that will be the place of supply. So let's think about it logically. The place of supply is where the supplier's role ends. So where the role of the supplier ends, that's where the transaction tax takes place. So if the customer picks up goods at my shop, the place of supply is the place of the shop. So if the shop's in Bahrain, Bahrain VAT will be due. If I have to post the goods to the customer, the place of supply is where I post it. So I go to the post office, I post it, that will be the place of supply. And we've covered installation, it's where we install the goods. Okay, I hope that's clear. But this is a lot of information to take in one go. It looks quite easy, but it's very easy to get confused on this. Okay, so that was the place of supply for goods. Now for services, the place of supply is worked out very differently. So the place of supply for services is guided by the place of residence of the supplier and the residence of the customer. So you have to think about where the customer is based and where the supplier is based. Now, generally, the place of supply for services is the place of residence of the supplier. So Bahrain resident, the place of supply will be Bahrain. However, where a non-resident supplier makes a supply to a customer in Bahrain, so that's, say, a law firm outside of Bahrain makes a supply to a customer in Bahrain who is a taxable person, so someone who is VAT registered. The place of supply will shift from the country outside to Bahrain, and this is where a concept reverse charge mechanism comes in, okay? So basically, the customer will be accounting for the VAT, not the supplier. Now, if a non-resident makes a supply to a non-taxable person, that is outside the scope of Bahrain, for example, electronic services. You'll notice, for example, when you buy or purchase an app from iTunes, iTunes are not based in, say, they don't have a registered office in Bahrain. You're not registered in Bahrain, but you still get charged Bahrain VAT. That's because the overseas supplier is required to register here because they have special place of supply rules for electronic services. Okay, so another thing to be careful about is which business or which branch are you dealing with? So businesses very often have different operations and branches in multiple countries. You need to consider the place of residence to the branch that is most closely connected to the supply that you're taking. So if the head office is outside of Bahrain, but you are dealing with a local branch, then the customer is local Bahrain based for place of supply purposes. Definitely consider that too. Okay. So if you look here, there's a table here, there's some very specific scenarios being covered here. You should look through these rules to determine if they apply to your business. So for example, business to customers or business to a non-taxable customer. So if you hire a car in Bahrain, or if you give a car to a non-taxable person in Bahrain, the place of supply is where the car is given to the customer, okay? So transportation, for example, if you're catching a bus, the location where you catch the bus, that's the place of supply. So if you catch a bus in Bahrain, then the place of supply will be Bahrain. Now, there's a lot of information about restaurants, hotels, sporting services, anything like that. That is where the service is performed. So if the service is performed in Bahrain, then Bahrain VAT will apply, okay? Special supply bid, this may impact a lot of businesses, real estate. So if you rent out property, which is not in Bahrain, it does not need to go into the Bahrain VAT return. But if you have property, commercial or residential, which is leased out or rented out in Bahrain, then you will need to ensure that this is reported on your VAT return as the place of supply is Bahrain. Okay, and then a little bit about telecommunication services. Unlikely any of you involved in that, but just in case you are, the location of the place of supply is normally where the use and enjoyment of the service takes place. Okay, I know there's a lot of information to take in, but as you go through these rules again and again, they'll start to become more familiar. It's very difficult to take all the rules in one go, so it does take some time, so that's okay. Okay, I'm going to give it over to my colleague Dan. He's going to discuss the important time of supply rules with you guys.
Thanks, Tariq. So for those of you who have submitted VAT returns throughout 2019, you would have known the time of supply rule, hopefully inside out. And it is very important that you get the time of supply rule correct, because this is when your VAT liability crystallizes, and that is when you need to pay the VAT due to the NBR. So let's talk about the time of supply rule for goods. And as you know, it is the earliest of tax invoice issuance date, payment receipt date, or date when the goods are supplied. Now, it is important to know that under the date when the goods are supplied, there are further bifurcation. You need to ascertain, first of all, whether the goods are supplied with transport or not. If it's with transport, the time of supply is on the date the transport starts. If it's without transport, the time of supply is when the goods are placed at the disposal of the customer. And the last one is if it's supplied with installation or assembly, the date when the installation or assembly is completed is when the time of supply is due. Always remember, when your time of supply is due, you have to issue a tax invoice by the latest the 15th day of the following month, during which a tax due date was triggered. So any of the events that you see right now on the screen has been triggered. You need to issue a tax invoice by the 15th day of the following month. Any delay in issuing a tax invoice may be subject to penalties. Okay, now let's move on to the time of supply for services. As you can see, very similar to time of supply for goods, but there is one or rather two important points here. First, the first time of supply is your tax invoice issuance date, similar to goods. And the second one is your payment receipt date, also similar to goods. And the last one is the date of the supply of the services, the completion of the services. You also have to remember there are two kinds of services. You have discrete supplies and you have continuous supplies as far as services are concerned. So you need to ascertain your services falls within which category. And we will first talk about discrete supply. Now, the date of supply for discrete supply is when the services is completed. So whenever you enter into a new contract with your clients, you need to know whether the supply that you're making right now is a discrete supply or a continuous supply. Continuous typically relates to mobile phones, rental, and etc. So for supplies made on a continuing basis with periodic payment of consecutive invoice milestone, the tax due date is the earlier of tax invoice issuance date, payment receipt date, and the payment due date as stated on the invoice. Okay, so if you did not, in the third point, if you actually did not state due date on the invoice, it will not trigger your time of supply. But one very important concept here is you must remember, if none of the time of supply above occurs for 12 months, the time of supply will be triggered after 12 months and every 12 months thereafter. This is particularly important for construction industry. typically where you have a retention payment which may be payable in 2 years' time after the completion of the project. So this time of supply, specifically on the 12-month rule, has to be remembered. You have to make sure that you're monitoring to make sure you do not miss the time of supply and pay your VAT due as and when required.
Okay, excellent. Thanks, Dan.
Yep.
Okay, so what does a Bahrain VAT return look like? Well, if you look at here, this is the Bahrain VAT return. It asks for a lot of information which other tax jurisdictions don't ask for, and so it's very detailed. Okay, the first column is the amounts column. So this column is the amounts column, okay? The VAT amount should not be reported in the amounts column. So if you have a purchase for, or have a sale for 105 BD, with VAT, 100 will go here or 100 will go there if you make a purchase, and the VAT will go either there or there. But you will never put the VAT in. The VAT is always calculated automatically, okay? So that's the amounts column done. Then you have the adjustment column. Now, adjustment column is for reversals of sales or reversals of purchases. So you buy something and you return it, or you sell something and your customer returns it. When an amount is entered into the adjustment column, it reduces the amount of VAT. So for example, so you have 100 in the amounts column and 50 in the adjustment column. VAT will only be worked out on 50. So that will be 100 minus 50, that leaves 50. So that will be worked out on 50, okay? Now, even in the adjustment column, ensure you don't report the VAT amount. So if you have an adjustment or a return of a sale, 105 or say 210 BD, you will only report the 200 BD and not the 10 BD, because the 10 BD will be worked out here automatically, okay? Right, now this is a snapshot of the sales section of the VAT return. All supplies that you make will be reported here, but if you remember a few slides ago, we talked about the place of supply rules. If the place of supply is not Bahrain, you will not report that transaction in this VAT return. If it is Bahrain, then you will definitely report it, or you should definitely report it in the VAT return, okay? Now, if you look at this field 2, sales to registered customers in the GCC states, this is not active at the moment, so you can ignore that. And field 3 as well, it's pretty much best to ignore that. It's very unlikely that you will have sales subject to domestic reverse charge mechanism. I'm not going to go into some detail because it's a little bit of an area in itself. So field 2 and field 3 at the moment are most likely to be left blank, okay? Then we have zero-rated domestic sales. Now remember, there's a big difference between field 4 and field 5. Field 4 is zero-rated products, goods or services, which qualify in their own right as zero-rated. So a bottle of drinking water, for example, is zero-rated because the good itself is zero-rated. Whereas field 5, the goods or services don't qualify, but that's because they are exported from Bahrain. So you buy, a customer tells you to export something outside of Bahrain, then that will be zero-rated potentially because it is an export. And field 6, again, not many businesses will be having this, but maybe this is for banks or people who rent out property. They will be reporting their exempt supplies in box number 6. Okay, so this is the purchase side of the VAT return. So the second section, I would say. Now, field 8, this one here, is all the purchases with VAT should be reported here, but only if you have a compliant tax invoice, okay? If you don't have a tax invoice, guys, don't report it because it's a headache and you don't want to be doing that, okay? So field 9, this is if you import something into Bahrain from outside, so customs will charge you import VAT, and what you will have to do then is report it in section 9, so that's box 9 here, but you can only do that if you have a customs bayan in your name. So if the customs bayan is not in your name, guys, you cannot recover this via the VAT return. So you may want to talk to your freight forwarder if you're making imports, just to make sure your VAT number, your CR number, and your name appears correctly on your customs bayan, okay? So, okay, the next one is field number 10. Now, this is purchases from overseas. So, for example, you make a purchase of legal services from, say, Belgium. Now, the Belgian people will probably not charge you that. But anyway, what you have to do is you have to get the net amount that is on the invoice. If the invoice is $100 US, you convert it to Bahraini dinars. Whatever, say 35 dinar, for example, you would report 35 here. and the rest will automatically be worked out, okay? So this field, essentially what it does, it reports output tax and input tax at the same time. So this is why, even if you have an amount in there, this will probably come as 0, okay? Now, field number 11, guys, you can ignore field number 11 because, again, it's very rare for this to apply at the moment. And field 12 is a very big field, lots of things going there. We'll concentrate on this a little bit further down the line because a lot of things which are to be reported and which are also not to be reported. Okay. Right, let's start with some questions. Me and Dal will be going through this quiz. If you have a pen and paper, great. If not, just, have an answer in your head and see if you get the answer right. So the first question is, Nafis Sweet sells a box of chocolates for 11 dinars, including VAT. How should Nafis Sweets report this on their VAT return? Okay, so we're assuming Nafis Sweets are obviously a taxable supplier, no other supplies have been made. Is it A, 11 dinars plus VAT of 0.55, 550 films? Or is it option B, 10.476 BD plus 0.524 VAT? So I'll give about 5, 6, 7, 8, 10 seconds, and you guys can have a go at that and see which one you think is right. I've got some people raising their hands. That's fine with me. So when I say option A, if you want to raise your hands, that's fine. That's okay. Okay, so the correct answer was option B. That is because 11 BD is VAT inclusive. It's not 11 BD plus VAT. So if you total that, 10.476 plus the 0.524, we will come to 11 BD. Okay, so that's the right answer. Okay.
Okay. Let's look at question 2. Murtaza Motors purchases a car for 15,000 BD plus VAT. Now, after 3 months, they sell it for 10,000 BD plus VAT. In this case, how should they report the sale in their VAT return? Is it option A, reporting 9,524 BD, or option B, 10,000 BD, or option C, 5,000 BD? We'll give you 10 seconds to go through the answers, and we shall discuss the answer later.
Okay, the correct answer was option B.
So why is the correct answer option B, and why is it not option A? This is slightly different from the question earlier, question number 1. 10,000 was sold exclusive for VAT. So we need to add VAT on top of 10,000 BD. So your principal, which is the tax-based amount, should be 10,000 BD and not 9,524. Now, for those of you, if you have chosen option C, please remember you do not offset your purchases and your sales and only report the difference as your sale. Okay, this does not apply to you. That is a different scheme entirely, and we will not talk about the profit margin scheme today.
Okay, thanks for that. Just to recap that point quickly, if you make a loss on a sale, you still need to report the total sales amount. That's what we're saying essentially. Okay, question number 3. Evian Water sells 100 bottles of water for BD 50. How should they report this on the VAT return? Is it in box number 4 or is it in box number 5? So I'll give should be an easy question for all of you. We'll give a few seconds to answer the question. Okay, the correct answer is option A. Why is it option A? It's the good itself. So the bottle of water itself is subject to 0 rate of VAT and is not being exported. So this is why we're putting it into box number 4.
And just to add on to that, so most of you would have come across the basic food items, the 0 rating list. All of the sale from the 0 rating list will also go into field 4 of the return and not field 5 or 6 of the return. Okay, now let's move on to question 4. Margaret Furniture Store exports 10 chairs to a customer in Italy for 250 BD. How should they report in their VAT return? Is it option A in field 4, or is it option B in field 5? All right. And the answer is option B in field 5. And this is again different from question 3, because in this case, we are exporting the goods. Margaret Furniture Stores, they are exporting the goods from Bahrain to Italy. Now, had Margaret Furniture Store sold these goods in Bahrain, it would have been taxable at 5%. It would have gone to field 1 of the VAT return. In order to qualify for field 5, Margaret Furniture Store has to go through all the zero rating requirements to make sure they are all met before zero rating the supply. And in this case, because the supply qualifies for zero rating of exports, it will be reported in field 5 of the return.
Okay, question number 5. It's a long question. One to think about, a bit more detail. So Sam Designs charges 5,000 BD for interior design services. So a customer comes in on the 5th of January and says, I want some services for my house. They perform it on the 5th of January. Everything's done on the 5th of January. Payments taken, everything's finished. On the 4th of April, customer comes back and says, hi, actually, I didn't like your drawings, so can I have my money back? Now, Sam Designs returns the money in full. How would this be reported in the VAT return, considering the refund has taken place in the next tax period, so in quarter 2 of 2020? So would it be A, 5,000 would be reported in amounts and make an adjustment? Would we report it just as an adjustment of 5,000? Or would we do it as 5,000 in the standard rated purchases? So the first two is in the sales section, and the next one is in the purchases section. So I'll give you a little bit more time on this because this one has 3 answers, so a little bit more to think about there. Okay, time's up, guys. If you don't have an answer, then we'll share the slides anyway later on so you can have a look at them. But the correct answer was B. So why is that? Well, B is in the adjustment column is when something is returned for the sales side. So when the customer returns something in a different tax period. If it was in the same tax period, we would report it in the amounts column, not in the adjustment column. That's the only difference. So sale and return in the same period, report it here. Sale and adjustment in a different period, sale goes there, adjustment will go there. That's the only difference.
Right, so Frank's Accessory sells 20 phones to a customer for 200 BD excluding VAT. And now the customer returns 5 phones. And how should both transactions be reported in Frank's Accessories VAT return? Is it option A, just reporting 150 BD? Or is it option B, reporting 200 BD as sales and 50 BD as adjustment? Obviously, in this case, we assume one phone is 10 BD, it's only for 10 BD per phone. So now, is the answer option A for 150 where you net it off? Or is the answer option B where you report 200 and you report 50 as an adjustment? Remember the adjustments that Tariq mentioned just in the slide before. And the answer is option A. Now, why are we reporting 150 and not with 250 in adjustment column like option B? Now, in this case, we assume that, and you can see, the customer returns 5 phones later in the day, which means the customer, or rather the supplier, sold the goods and got returned goods within the same day, which means within the same tax period. Now, in this case, you will net off the returns or the adjustments in the amount column, which is this one, and only report the difference. Okay?
Okay, next question. This is for those who are making exempt supplies, you know, maybe financial services, very unlikely, but this is a question tailored for that anyway. So Ahli Bank gives a 500 BD loan to David and receives 520 BD back, including interest. How would this be reported in the VAT return? would Ahli Bank report the interest only, so that's 20 BD? Or would they report the 520 BD, i.e. the whole amount? So the customer returns back 520. What do you guys think the right answer is? So the correct answer is actually option A. They only report the 20 BD interest income. The 500 BD is considered as a principal loan amount, and that therefore is not considered as the supply value. Okay, so question 8 now.
So Safe Tower purchases a computer for 1000 BD plus VAT. So it is excluding VAT in this case. How should they report in their VAT return? Is it option A, 10,050 in the amount column, or option B, 1000 BD? Sorry, it was 1050 BD earlier in option A.
Give a few seconds.
Yep. And the answer is B. So again, always remember, you always report the tax exclusive amount in the amount column. All right. This is what we know, what we call it as a tax-based amount. All right.
Okay, Guy, we're just a few more questions left. I hope this is really useful for you, these questions. So Home Center imports 3 dining tables for 300 BD plus import VAT on top. Now they use 2 tables for business use, but one of the directors takes home one of the tables for private use. Now, how would this transaction be reported on their VAT return? Would they report just a 200 BD for the 2 tables? Would they report the whole 300 BD, so the private and business use? Or would they report the 300 BD and then make an adjustment of 100 BD? What do you guys think the right answer is? I'll give you a few moments to think about this one. Okay. The correct answer is actually option A. Now, some of you may be thinking, hey, actually, one moment. Option C is correct. Well, actually, factually, it is correct. So option C is also an option, but recently NBR have been advising our clients not to report the block amount on the VAT return. So we've adjusted our advice accordingly. I mean, materially, there's no difference at all. So they are saying just report the 200, no need to do 300 and then minus the 100, even though it makes no difference. Okay, so that's something to think about. Before you do your VAT return, don't report any blocked expenses in the VAT return.
All right. Mark Computers paid a quality subscription fee of $200 to an overseas software supplier. How should Mark Computers report this on its VAT return? Is it option A, 200 in the amount column and 200 in the adjustment column in field 10? Or is it B, 200 in the amount column in field 10? Or is it C, 75 BD approximately in field 10 of the VAT return? Now bear in mind the original invoice was issued in US dollars. And the answer is C. So always remember, for VAT return purposes, for field 10, import subject to reverse charge mechanism, you should always have to convert foreign invoices into Bahraini dinar equivalent. You must also always remember to use the exchange rate approved by the CBB, the daily exchange rate approved by CBB. So all you need to do is log on to CBB's website. They have historical rates as well. And from there, you will be able to identify the Forex rates that you need to use to convert your foreign tax invoices.
Okay, thanks, Joe. So last question, question number 11. Adi Motors purchases car parts for 500 BD, but he has not received a proper tax invoice yet. How should Adi Motors report this purchase in their VAT return? Should they report nothing, so just leave it blank? Should they report the purchase, but then make an adjustment because they don't have an invoice? Or should they just report an adjustment of 500? I'll give you a few moments to think about that one. Correct answer is actually, you report nothing. because you've not received a tax invoice, which is valid. Therefore, you cannot just report it and adjust it because that's not correct either. So just wait. When you receive the valid tax invoice, you report it in the VAT return on the tax period that you receive it. Just one point though, just make sure when you are issuing invoices to your customers, make sure it matches the VAT registration certificate to the letter, because otherwise you'll be getting a lot of customers coming back saying, please can you reissue my invoice. So if you have a lot of customers, that becomes quite a painful process.
Okay. So we're going to go through quickly on apportionment of input tax. This is particularly for the mixed suppliers. ADCL Limited makes taxable supplies of 800 BD and exempt supplies of 200 BD. So the total supply is 1,000 BD. In this tax period, they incurred general expenditure which is not directly in relation to exempt or taxable of 500 BD. In other words, 500 BD of residual expenses. So as a mixed supplier, we must always remember we will never be able to claim all the input tax that we have incurred, even if it's for business purposes. We must always remember that all input tax that we have incurred are used to make taxable supplies, in this case 800 BD, as well as exempt supplies, in this case 200 BD. So for all the residual expenses, they all have to be apportioned according to the ratio calculated based on your sales. Now in this case, your claimability is 80%, 800 out of 1,000. That means you have to restrict 20% of the claim. Now, if you could see in field 8 in the amount column, we have reported 500 BD as residual input tax, tax base that have incurred. We knocked off 100 BD, which is 20% of 500, and we only claim 80% out of it. We are only claiming 20 BD out of 25 BD. Okay, so always remember, if the expenses are in relation to residual expenses, you can only claim a portion of it. If it's directly in relation to taxable supply, you claim in full. If it's directly in relation to exempt supply, do not claim at all.
Okay. Just want to add a quick point on that, guys. A lot of businesses will say, well, all of our expenses are general overheads. And that's strictly, I mean, that's not the correct position. I mean, some of your supplies will be directly, some of the expenses will directly relate to exempt expenses. Therefore, you should not recover any VAT on that. And so the risk is on the exempt side. Where purchase relates to an exempt supply, where, then there's a bit of a risk there. So just think about this carefully before you start reporting these amounts in the VAT return. Okay. What not to report in field 12 of the VAT return. Now, field 12, a lot of businesses report everything. So everything that they're not sure, they will just dump it in field number 12. Now, there's a lot of things that you don't report there. So let's start. Number one, salaries. Don't report salaries in your VAT return anywhere. So if you pay your staff salaries, leave them out, don't report them. If you pay your staff any cash allowances, transport allowance, housing allowance, food allowance, or any other sort of allowance, again, don't report it. Okay, then you have dividends. Now, dividends should not be reported in the VAT return either, okay? Payments made on behalf of others. So, for example, you approach an agent and say, please renew my driving license. And he will say, okay, can you give me 20 BD for the driving license fee plus my commission of 10 BD? Now, when he reports it in the VAT return, he will only report his commission. He will not report the 20 dinar he collected, which he will merely pass on to the driving license authority. So just to be careful on that too. So that includes all other government fees. Now, purchases where you cannot recover input tax, we covered that before. It's a blocked expense, don't report it. If you get a speeding fine, definitely don't report that either, because it is not required to be reported. And private purchases, if you make, for example, directors make private purchases, owners of the business, no need to report that either, okay? So there's a lot of things there. Just make sure you take that into account before you submit your final VAT return, okay? Now, we're going to go through some of the Bahrain FAQs. These are the frequently asked questions we were talking about previously, which commonly the Bahrain businesses are asking us. They ask us, can I recover VAT on purchases which took place before I registered for VAT? So, if your VAT effective registration date is the 1st of Jan 2020, and you incurred expenses with VAT in September 2019, then you may be able to recover them subject to other criteria. There's different criteria for goods and different criteria for services. So there's a lot of conditions. I'm not going to the conditions today, but just to be aware that yes, you can recover subject to criteria. Now, we've covered this bit, not received a compliant tax invoice, don't report the purchase at all. How should I report export? So you're exporting something, but you are not able to meet the 0 rating conditions, then what you do is you report it as a standard rated sale if it is a taxable. So if you have for example, a chair that you're exporting, you don't have the evidence, you must standard rate it and report it in field number 1, okay? Some of the businesses that we've come across are recovering VAT, which is been applied in a different country. So they go to Saudi company charges them VAT, and they try and recover the VAT through their Bahrain VAT return. You're not allowed to do this. You can only recover Bahrain VAT via the Bahrain VAT return, okay? Next point is, when can the corrections field be used? So that's field number 15 of the VAT return, is if you make a mistake that relates to a prior tax period and the VAT is not more than 5,000 BD, you can report it. But that's only applicable if it's the previous tax period. So for example, you make a mistake in quarter 1, 2020, you can use field 15 in quarter 2, 2020. But if the mistake relates to, say, quarter 4, 2019, and you're submitting quarter 2, 2020 VAT return, then you can't use the correction field. You must go in and submit a voluntary disclosure by logging into the NBR portal and amending the VAT return by that process, okay? We've covered adjustments, how to report adjustments. If it's for the same tax period, an adjustment is netted off in the amounts column of the VAT return. Otherwise, it is done via the adjustment column if it relates to a supply that took place in a prior tax period, okay? How do I report mobile?
Hey, Tariq. I might just jump in now because I just got a question on the Q&A around this point around corrections and adjustments and just understanding the differences between the two. So could you just give us a little bit more background as to what is an adjustment, when would adjustment arise, and then why is that different from a correction? Okay,
thanks, Mark. Good question. So an adjustment is when the value of the supply has changed, and that is a correction is when a mistake has been made or something has been left out which should have been reported. So correction is a mistake, adjustment is not a mistake. Adjustment is where you sell something for 100 BD, the customer comes and says, I want 40% of the goods I want to return, and then the new value of the supply is now 60 BD, so the 40 BD is an adjustment. That's the difference essentially between a correction and an adjustment. Okay. We'll go on to how do you report mobile phone expenses or car use. Now, a lot of businesses are doing different things. So the NBR published a simplified method for businesses who have mobile phones, which are available for private and business use. You can recover 60% of the expense via your VAT return for mobiles only. So if you have 100 BD expense, you will report 60 BD in your VAT return. 40 BD you will leave out completely, okay? And for cars, it's 40%. So you can recover 40% where the car is available for private and business use. Now, simplified method also has some conditions. And again, because it's a subject in itself, we've not gone through all the conditions, but there are some conditions which need to be met before you can even recover 40% or 60%. So definitely familiarize yourself with the rules before you make a claim for either cars or mobiles. Okay. What happens if I make a mistake in field number 12? Look, if you make a mistake in field number 12, there's no VAT issue because there's no VAT on expenses being reported in field 12. However, because there is no mechanism to report it in the next tax period, for example, box number 15, you can't use field 15 for issues around field number 12. So what you have to do essentially is go back, log into the online NBR portal, and resubmit an amended VAT return. That's what you really should be doing, or should do. Okay? Right.
So these are some of the common VAT return errors that we have seen from our clients, from the past experience. First one, reporting transactions in incorrect fields, particularly in field 12, as well as field 4 and field 5. Remember, field 4 are zero rating of domestic supplies, and field 5 is for export of goods or services. This are very, very common errors. Even probably myself, I've done a couple of mistakes before as well, but always remember to double check field 4, field 5, and field 12, okay? Not using adjustment column correctly, I'm pretty sure Tariq has covered sufficiently in the slides earlier. Remember, adjustment is for adjustment in the value of your supply. Your supply is no longer the same price that has been invoiced before. And for correction, it is for the mistakes that you have missed out or transactions that you should have reported earlier, okay? And the third one, recovering input VAT without compliance tax invoices. Very often we hear from our clients to say, we don't have the compliant tax invoice as per the Bahrain guidelines, but I'm using it for business purposes anyway. Why can't I just claim it? Now, always remember, you can only claim input VAT that you have paid to your suppliers when you are in possession of the compliant tax invoices. As Tariq mentioned earlier, your name, address, your TRN, which is your tax registration number, has to be exactly the same as your and your supplier's VAT certificate or as per the NBR's portal. And the last point is incorrect FX rates used. Now, very often businesses have internal rates, which is probably updated on a weekly or bi-weekly or monthly basis. Now, always remember, for VAT reporting purposes, you must use the exchange rate as published by the Central Bank of Bahrain.
Okay, thanks for that. Now, so if I can ask Mubin and Mark to come online and maybe discuss some of the questions that the attendees have been posting via the chat box, and maybe we can have a little bit of a discussion through that.
Yeah, no worries. So there has been a lot of really good questions. Tried to answer most of them as we're going, but I'll pick out a couple that I think might apply across the board. So you're talking about the reasonable apportionment for mobile phones and motor vehicles, and we had a question around what about trucks and whether that same ratio could apply to trucks. So Tariq Khan, jump in if you have any comments, but the way I would look at that is trucks are generally, the way I see it, 100% business use for the most part. And what this ratio is getting at is vehicles that are both used in your business. So employees will use it for their normal business activities, but then they might drive it home on the weekend or they might take it home. So there's some private element as well. So that's what that ratio is trying to help with. Whereas with the trucks, if it's the same scenario and there's private use, then you could look at the ratio, but otherwise you might get a better recovery rate by just looking at the actuals. Tariq Khan, do you have anything to add to that?
No, I completely agree with you, Mark. I mean, no one uses a truck for private use. Well, very unlikely. And even if it was, it would be a very odd occasion. So on that basis, I think it's generally going to be 100% business use, and that apportionment really is for vehicles which are, commonly used for private use.
Yeah. And I think it's just about maintaining those records as well. And then we had a question around office landlines. So can that rate apply to office landlines? Tariq Khan?
Office landlines?
So if you get a clarification, the NBR has only clarified on mobile phones. Office landlines, again, typically is used for business purposes. And typically businesses would have an HR manual basically to say the landline should only be used for business purposes, and that should usually be sufficient to justify to the authority that the company has done its due diligence, has done the best it could to make sure that the landline hasn't been used for private use. I would say it should be claimable in full, unless you can specifically identify private calls, which will be a very tedious task.
Yeah. But I just want to add to that. I mean, generally a landline will be for business use, and anything private will be very odd occasion incidental. So unless there's an employee who's, where half the bill is for private use only, I think generally it should be okay to put it through as a business only cost. And NBR, from my experience, have been doing apportionment for mobiles. They're not really focused on landlines, so I think that's quite unlikely. That's what I think.
Okay, no, that's fine. And the age-old question of reimbursements and disbursements has reared its ugly head. What can you quickly explain the difference between a reimbursement and a disbursement and why it's relevant for that?
Okay, so a reimbursement is when you're charged an expense and then you on-charge the expense. So there's actually two supplies there. So there's, say, person A, he charges person B, and then person B charges person C. So there's actually two different supplies there for VAT purposes, okay? Whereas a disbursement is where person B merely collects the money from one person and passes it on, just like the one example we're talking about, the driving license fee, or say LMRA fees. LMRA fees are directly for LMRA. I mean, it's not money collected by the supplier for themselves. So they're just merely collecting the money and passing it onwards, and that's a disbursement. So the disbursement amounts are not reported in the VAT return because the person is not acting as principal, it's just collecting the money and forwarding that money on to the person who the money belongs to.
I guess another relevant example is for imports. So when you import goods from abroad, typically you engage a freight forwarder to clear the goods for you. Now, in this case, the freight forwarders typically will pay import VAT on your behalf first. Now, remember, the import VAT is addressed to you by customs, and you are the party responsible to pay. But you can't do clearance. You appointed a freight forwarder to do it for you. Now he has done it for you, and he has paid import VAT on your behalf. Okay? And in this case, when he recovers the VAT, import VAT that he has paid on your behalf, that is known as a disbursement. And who always remember, in a disbursement scenario, the invoice is issued from one party to another, but like Tariq mentioned, party B in this case will be the paying party, collecting and paying to, collecting from C and paying to A. Okay, that is the difference between a disbursement and a reimbursement.
Okay, so another question we have is, and it seems to be a common question, if I receive a compliant tax invoice for a purchase, but the amount is so low that the admin cost of me entering it into the system and all this kind of stuff is just too much and I just don't want to claim, what do? Do I need to report it, or can I just exclude it from the VAT return?
Just leave it out. I mean, if it's costing you more to process that invoice, just don't report it on the VAT return. If that's for field number 8, but if it's in relation to another field, say for field 12, then you will need to report it because there's no VAT you're claiming, and it's a reporting requirement. Whereas if you're not claiming something, then there's nothing to report from a VAT perspective in field number 8 or field number 9. So I would say for import bans as well. You agree?
Yeah.
That's what we would say.
And say that I receive a non-compliant tax invoice in October 2019. It's not compliant, so I don't recover it. What do I do? Do I need to wait until I receive a compliant one? How long do I have to wait for it? And when can I report it?
Well, essentially, you need to have a compliant tax invoice. Until your supplier doesn't give you a compliant tax invoice, you can't recover the VAT, so you just can't report it anywhere. Now, that's about you chasing your supplier. You need to chase your supplier. But remember, if your supplier's tax invoice is not compliant, there'll be a lot of other customers chasing in too, or them too. So it'll probably be a matter of time. But again, like I said, if it's a very small nominal cost, say it's 1 dinar and I don't know, 50 fils VAT, then it's probably not worth your while to chase that sort of invoice amount. Yeah.
Okay. And say I've run a business, purchased a new car for the manager who uses the manager of the business who uses the car. Can I recover the VAT on the car?
Well, you can recover the VAT. I mean, it depends if it's available for private use and business use. If it's available for business use only, and the business use is monitored, and you have controls in place, and you can substantiate it's business use only, then you can recover the VAT in full, subject to the evidence requirements. And if it's going to be even available for private use, so the person doesn't have to take it home, if it's only available for them to take it home, then you will only be able to recover 40% of the input tax for a car.
I guess that goes back to that general principle that you can only recover input tax to the extent that the thing you bought is used in your economic activity, in your business.
That's correct, Mark, yes.
Looking at the reverse charge again, so how should we report the VAT liable under the reverse charge mechanism in the VAT return when we import services from outside Bahrain?
So the first thing is we need to convert the foreign amount that we have paid or we are paying to the foreign supplier. And we also must remember we have to account for reverse charge based on the price paid. So if the foreign supplier charges us VAT for whatever reason, we will always have to take into consideration the whole amount that we have paid for reverse charge reporting purposes.
Yeah, so just on that bit, so if you charge 500 euros from your supplier in total, including any European VAT, you add 5% to that, and then you convert the VAT amount to dinars, and that will be the VAT liability. But if you're putting into box number 10, it'll be an output and input in one go. So essentially, it will be recoverable. It's recoverable. So if you're a taxable supplier, then it will have no impact to you.
And just conscious of time, so maybe one or two more questions. If I issue a debit note to a customer, how do I report it in the VAT return?
So a debit note is, again, an adjustment to the original value of the supply, but the supply value is increasing. Practically speaking, you should report it in the amounts column. So you bought something for 100 dinar, the supplier says, actually, I should have charged you 120. Here's a 20 BD bill for the additional amount. You should report that in the amounts column of the relevant field of the VAT return. That's what you should do.
And just finally, I guess on a more of an admin related question for those that are lodging returns this quarter or month, how do you make a payment to the MBR? How does that happen?
So MBR payment, there's three options. There's an online bill. There's a FAQS options. You can go into your bank and you can pay. There's a benefit pay app. So there's three options to make payment.
Okay, and I think it's just important to remember for those new taxpayers that you do need to use FAQS. So make sure that your bank is set up on that and can make the payment. I know some banks couldn't do it through the online system, so you needed to actually attend your branch and submit the FAQS form that way. After you submit your VAT return, you'll get a bill statement, which has a bill reference number that you can use to make the payment. You need to reference that bill reference number. You need to make sure you've got that right. And you need to pay the exact amount that's on that bill statement.
Yeah. But just a quick one, Mark. Like I said before, I would probably recommend people to try and make the payment and everything maybe 4 or 5 days before at least, just in case they have any teething problems. It will give them sufficient time to submit and pay before the deadline. That's what I would definitely reinforce there.
Yeah, and just one final thing to add. So we've heard, obviously in Saudi Arabia, they've extended payment deadlines and lodgement deadlines. As of today, as of now, there hasn't been any similar announcement in Bahrain. So currently, just proceed as normal. It's due at the end of this month, due to be lodged and paid if you have a payment. There is no extension at the moment. There's rumours of a potential extension to timeframes, but at the moment they haven't been formally announced. So I would proceed on the basis of due at end of this month.
I agree. Okay, well, thanks guys for joining us. The next webinar that will take place will be this Sunday. That will cover NBR updates and all the different guides. NBR is always providing updates, so we will focus on that. If you're not registered and you have time, definitely recommend you sign in and we can go through and cover a lot of topics which are really important for all businesses. So thanks for attending, guys. And
for those of you who are still looking for answers to your questions, feel free to contact us. You can get our contact details from the Keypoint website, or if you already have, feel free to drop us your queries and we'll try our best to answer.
And sorry, just in relation to any of the questions on already posted on the Q&A that we haven't answered, we've tried to answer as many as possible. We will answer them after the webinar, so you will still receive answers to the questions that have already been asked in the Q&A section.
Yeah. All right. Thank you very much, guys. Have a nice day. Stay safe.